This week has been another really good one for equity markets, with a number of major indices reaching new record highs. For example, the MSCI World Index, which represents large and mid-cap equity performance across 23 developed market countries, posted a new all-time high, while in the US we had the Dow Jones Industrial Average on Wednesday posting a new closing high for the 9th consecutive day. This performance has come against a backdrop of further robust economic data, including indicators which show that there's further expansion expected across both manufacturing and service-related sectors. This week also saw the release of minutes from the Federal Reserve's monetary policy meeting at the end of January, and these provided little in the way of new information. Although the minutes did indicate that a rate rise will occur fairly soon, markets are currently suggesting that this will not be at the March meeting, with the implied probability based on Fed fund futures currently sitting at around 34%. This relatively low probability may be reflecting some concerns over the weaker than forecast earnings growth in the last employment report, and also some uncertainty over the extent of the fiscal stimulus we're going to see from the US. Meanwhile, in Europe this week, the focus has continued to be on France's presidential race, and Mark Nelson is going to talk a little bit more about this. In terms of corporate news flow, on our covered stocks next week, we have results from Taylor Wimpey and GKN on Tuesday, and then on Thursday we have Travis Perkins, Deutsche Telekom and Continental, and WPP and Gemalto on Friday.
As part of our predictions for 2017, we highlighted the prospect of increased political uncertainty in Europe this year, with a number of elections due to take place on the continent. One of those elections is in France, and the uncertainty surrounding the result there has increased recently ahead of the first round of voting due to take place in April. Of the three frontrunners is the National Front's Marine Le Pen, who financial markets seem most uncertain about. In particular, her pledge to take France out of the Eurozone if she is elected. While Le Pen is likely to win the first round of the election, it is expected that she will eventually lose out in the second round of voting to either Emmanuel Macron or François Fillon. Second round polls this week, however, suggested that Le Pen is gaining ground on her rivals. At the beginning of the month, polling suggested that Le Pen would take approximately 35% of the votes if up against Macron in the second round, or 39% if she was up against Fillon. However, a poll released on Monday suggested that her support has increased to approximately 42% against Macron and 44% against Fillon. This uncertainty has led to an underperformance in French assets. Whilst German two-year government bond yields have fallen to a record low this week, French yields have risen, taking the spread between the two yields to the widest level since 2012. It's a similar story in the stock market, where the French CAC 40 index has underperformed the broader European equity market since the beginning of the year.